Hey, everybody, great to be back here with you. My name is Mike Fairborn. It's good to have you here for our markets and sectors class, where we do look at different markets. We look at strength of markets. We look at some of the weaknesses out there within the markets. We also look at sectors, and that is the closing bell right there on the market as well. But folks, as we look across the board, let's see what is moving this week and breaking down this into specific sectors. We got a number of different indicators to help us analyze, potentially just look and see what might be on the verge of turning, either to the upside or to the downside. So I'll look forward to going through that with you. It is good to be back. And folks, welcome to each of you. We do have here joining us Mr. Kevin Baker. Hello to you, Kevin. We've got Riceberg. Always great to have Riceberg. Frank here. Tatiana. How are you doing? Beth, Mighty Mouse, and Sharon. Welcome to all of you. It's good to have you aboard. I'm joined in the chat by a friend and colleague of mine, Mr. Cameron May. You can follow Cameron on Cameron May CS. That's on X, everybody. Cameron May CS on X. Mike Fairborn CS on X. Just exactly as Cameron spelled those is how you would find them on X there. All right, well, with that, I've got plenty to look at today, and it is awesome to be here with you. So let's do this. Let's tune on over into some disclosures so we can get this show on the road here. Information here is provided for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application is provided for educational purposes. Investing involves risk, including for some products more than your initial investment. Now, I do have a little section here on futures disclosures. We don't trade futures here, but we observe the futures markets. There is information to be gained because futures does have volume associated with it, something you don't get on the market indices, the major market indices. And so it has been a great reference for us. We'll go ahead and look at that again today. And just a final note here, past performance is no guarantee of future results. All right, well, let's turn on into just getting started here with just a quick visual of the markets here as we break this down a little bit for us. You can see that we did have a little bit of downside volatility initially today, but what is interesting, folks, is we are holding, all else equal right now, we're holding in a very, very tight range after making really sort of this monumental kind of a V-shaped bottom, as you can all see here on that chart. I mean, that V, I'm just going to go ahead and point that out to everybody. I know you guys have seen this before, but yeah, down here, up to here, and that is pretty much one of the definitions of a V. Now, there was a little bit of a zigzag over here, but that is a strong recovery. Anytime you can see a sideways range, you are holding prices. The prices are holding in that range. That's what you're seeing, right? Now, what's interesting is when you see this occur after a long upward move, we're holding the prices. The markets, in a lot of cases, will do a lot of ebbs and flows, and sometimes you can go way down here if the trend's not too strong, and it could just do one of these trends that has a really, really sort of a mild slope associated with it, right? But if you're going to see markets that are pulling back, holding gains, and here's a great example actually right here. This was an upward sloping triangle. I'm going to go ahead and just knock this guy out right now. I'll keep that trend on. Why not? But you notice over here, even after this extended move, what did we get? A very, very small pullback. Look at this big run. Very, very mild. I mean, if you look at the whole of this move, which is what we want to do here, this entire move, we are just flattening out. Oftentimes, not every time, but if it's going to be, in many cases, a big pullback, you'll see a sharp breakdown here. It will come back here and kind of maybe find a little bit more weakness and then ultimately come down. These sort of strong bull flags are positive in a lot of ways. In fact, let's look at the ES, according to many traders, the way they would look at it, because it's just holding prices. I'm just saying they're positive because they're holding those gains after such a large run. You're seeing it even more on the ES, the futures, which can sometimes lead markets higher. But look at this. We're actually up a little bit here. Folks, I brought this up and we continue to bring in the futures because look at that money flow. I mean, we're not budging. We are, as prices went sideways, money flow is actually on the verge of actually making a high here. Now, that all else equal is a positive. That shows us that we are seeing positive flows in here to the upside and maybe not as many negative flows to the downside as prices consolidate within a range. Case in point, let's look over here. What's this down bar right here? Volume on this down bar was relatively light. You see it right there? My point to that, okay? Volume on this down bar was relatively light. And so on and so forth, relative to the collective moves of the up bar. Now, all else equal, you got to say that's a positive in terms of, holding that strength of buyers. So you want to see the whole idea here is if you can get more buyers than sellers as prices are holding up at high levels, well, there's just maybe more of a tendency for that trend to continue more in the future. And maybe we'll see some seasonality, which I want to show you here in just a second, pop out of that. Now, let's go into the NDX here, looking specifically at really, what's been driving a lot of the market too have been these growth stocks, these tech stocks specifically, which is exactly what this index is very, very heavily weighted in. If I'm going to pull down my y-axis over here, you can see that this is actually the extension we're looking at here of a shoulder, head, shoulder, really leading the market, these tech stocks, shoulder, head, shoulder on an inverted nature. And once we had that neckline breakout, we're simply just taking these highs and lows and extending them on up. And that's one of the beauties, really, of having price patterns, is that they can give you price targets based upon the measured moves that are building up within that pattern itself. If you come over here and look, are we there yet? No. But what this could suggest is that we might have extended moves to the upside. Also, if this is a flag pattern right there, could we also be measuring a shorter term flag pattern to this target range? Let's go ahead and take a look. I'm going to go down here and use one of our tools to the bottom right hand corner of the screen right here. So I'm just going to use the Fibonacci extensions right there, folks. It's the one to the right of the percentages. It's not this one. Fibonacci's are great, but just to the right are going to be the extensions. And they're not too bad either. In fact, if you click on it, you'll notice that, and let's zoom in. We're looking at this range to the upside, right? I got a lot of additional data that I don't need. Let's just clear that off. That's okay. We got our upper target up top here. Notice some of the ranges that we've been plotting over the last couple of months. This was a possible flag pattern right here. Did it meet that flag pattern? We're drawing it off the low range to the high level. It met that pattern. And these stronger trends will oftentimes have a flag pattern that will follow through the length of what some would refer to as, now not everybody does this, but a lot of times some investors, traders will use this as an ABC, kind of akin to Elliott wave, which I've studied for a number of years, but I don't know if everybody does. Maybe it's a 1, 2, 3. Maybe it's referred to also as a zigzag. I've heard the zig and the zag before as well. But this A move, this run coming up here, is really going to be equal to the C move, which is this move right here. So we're looking at an A equal to C is ultimately what's going on behind the scenes with a bull flag pattern. The interesting thing about this is we can keep playing this forward and forward and forward as long as that trend stays strong. And what did we just get through looking at on the ES? We just got looking at MF, and that is not Mike Fairborn. Of course, that is money flow. No, I just noticed the initials are the same, but money flow. Money flow is a big deal. And it can be because it's showing, according to the indicator, that prices are showing some strength up here, and maybe they can go up. So we were just assessing just a second ago the strength of that trend. And we're saying, gosh, well, maybe there could be another flag pattern to the upside. Let me go ahead and kill these ones now because we've done this one in the past. We've got a longer one that might be unfolding. But watch this. Let's use this one. This is this is the low. Click one time. Again, now I've got this this pulled up right here, this drawing tool. Fibonacci retracements. Okay, it is using Fibonacci, but it's enabling us to plot this out over time. In fact, if I click here, now I'm going to measure this down to the bottom of that move, which is actually right there. That's the low of the range. And just do the exact same thing that we just did. Right here to the top, measure that off the bottom, and that's your 100%. And look how close that comes to that longer term target range. Does that mean it's going to go there? No. Could it mean that if we do go there, there could be additional resistance that kind of resonates behind the scenes? Of course. Yeah, and that's why people will look at maybe a couple of different retracement levels, and then just kind of build it up, build it up through there is what oftentimes does happen when people are looking at those. So I'm going to highlight this because this is what we do talk about. This little, I do a lot of this analysis right here in this swing trade class. If you guys want to check it out, we talked about this in depth yesterday. I'm just going to go ahead and just copy that link address if you want it. If that kind of a trade, the shorter term trades do resonate with you, maybe something like that could be effective. But here, I'll just put this in swing trade class. And many of you, I do recognize your names. You guys were in there. Oh, there it is right there. There's the link right there to it. Okay. Yep, so it's just assessing the trends and looking at the measured moves. And that's all we've really done here, really, as we've gone through this. But yeah, so we'll see what does happen. I will say this, I brought up initially, hey, what was really, really holding this, has been keeping the markets up. All we need to do is look over here and say, well, what is it weighted in? How are these markets weighted? Visualize tab. Look at some of these giant blocks in here. You can see these market cap weightings, NVIDIA, MSFT, Microsoft, Meta, Google. That's a giant block if you count both of them, right? A couple of different class shares in there. You got Apple, you got Amazon, you got others in there, even Tesla, the sliver of Tesla as well. What did you notice about all these? They are tech related. That's what's been keeping really the markets quite strong. That is, we were looking at the S&P 500 there. But I mean, that's what's been really kind of helping the S&P 500 stay strong as well. So looking at those companies, it is interesting, and they do tend to perform better in a stronger type of economy. Okay, so that's one thing. I did want to come over here because I did want to say seasonality. How could this fit into seasonality? We check up on this. We do a quick check each and every week in this class just to be sure to see where we're holding up at. But here is where seasonality lies. We're going to hit some of this here, but not just yet. We are lined up almost identically with the average percentage performance that we have seen over the last 10 years this year. In fact, so down here, this is SPX this year. So this is the current S&P 500, okay, SPX. And up top here, this is, we'll paint some colors differently here, but this is the average, okay, that's the AVG of the SPX, okay, S&P 500. And that comes right down there. Woo, that's this guy right here. That's our average, the red line. Okay, this red line here, all through here. And you can see how we will frequently, not in every case, but, because there are going to be different years that vary, just that's a guarantee. But you can see that there has historically been some strength to the end of July. You see us go up there? Folks, 5 years, 10 years, 20 years or more, you'll see a move like this. If we're looking at seasonality, it's going to be very similar to it, but this is kind of the average. It doesn't have to unfold this way because there are moves that go up and go down, but when you combine them all together, that's what you get. So you get this average kind of perspective of like this. This is how the market on average will tend to run. Doesn't have to on any given year, but when you average them together, and there are many years that look just like this or very similar to it that make up that average. Okay, but what are we seeing here? We're seeing a run towards the end of July into the 1st of August. What did we just get through looking at on our charts here? We looked at a bull flag pattern possibly forming. So some underlying strength. Could it unfold and break out and go to that range? That remains to be seen. One thing we could also say too, though, if we get to August, it tends to be more sideways on average, and September tends to be down. Now, I wanted to highlight this just to kind of show you both sides of this, because not everything goes up, as I mentioned this, but here is the appearance. If I were to come down here and just show you, yeah, here's the yearlies that make up the average. Take a look. Did we have some that go down? Yes, but notice over here too, we have a fair amount over 10 years of companies, of years for the SPX that are going somewhat higher. Some went down, but do you see on average, many went up? That's what we're looking at. Okay, so we want to tie that in because it is of interest, could be of interest to us, as we dive on into this. Well, let's dive into another area. Did you guys notice today that we did see a little bit of a dip in the yields. The yields did dip a little bit today. I did notice this. In fact, as we came over here and looked at the 10-year, initially this little dip down here, there was some words out there that the president was going to try to fire Jerome Powell. He said, I think the word came out that he's not going to do that, but there was a little bit of a dip and anticipation, right, of interest rate cuts occurring. So we saw this come down, but yeah, it did not happen. It's true that we do have one of the highest interest rates out there in the world, but yeah, I mean, you can look at a lot of different angles too. So whatever they're looking at there, but that was that little blip that we saw, and that little blip right there, which was kind of a driving force as I looked into it, that did get our VIX, the volatility index of the S&P 500, the VIX, to just shoot up a little bit. But what I wanted to note for you on the VIX is the VIX historically has really had this tendency to really reside. Let's just go back a year. Shoot, let's go back even further. Let's go back 3 years, shall we? Let's just go crazy. What does the 3 year look like? I'm joking, but yeah, let's take a look at the 3 year weekly so we get a lot of data. You see how much time that the VIX can really spend between this really 12 range and let's just say a little bit higher, 15 range. Look at how long it's been. And now what this represents are really extended market moves. When the VIX is kind of weaker, sometimes you get, contrarily, markets are stronger. Less expectation of just a spike in volatility, but also you'll notice too that off these lows, we do also get the spikes coming as well. We are coming up to that historical, I should say seasonal time of the year where historically, again, not every year, but historically, August, September, October, a little sideways, a little down on seasonally speaking is what it has shown on average. But there you go. So you can kind of watch this and kind of get an eye on it, but we'll see what happens. Right now, though, I just want to say there has been a historical tendency too for prices, just VIX levels here and levels specifically, just to kind of come back down and maybe stay in these ranges for a while. And that generally means strength to the upside in the markets. Let's do a quick shift over here because we're just looking broad picture right now, folks. Then we'll dive into some specific stock examples here just momentarily, but just kind of lay the groundwork a little bit more here. I wanted to highlight that the dollar has really taken it on the chin. I mean, we're really, really quite low on the dollar, and it's been marked as we looked at bull flags before. We've seen just a series of bear flags here. Bear flag, bear flag, bear flag. In other words, the bear flag is kind of inverted, to the downside. You get the strong move to the downside and a weak move to the upside. And so we've been seeing that for a while. Now, will that continue on? That's the question. We don't know. I put a question mark there at the end. Let me scoot back and just show you here. This is a longer term move. If I grab a fib over here, these are always so fascinating on a longer term scale. I'm going to use a couple of key touch points here on our weekly chart. Pull this guy up to a couple of more key touch points, and you see where we're at? We actually dipped below the 61.8. Now, what a number of traders will say is if you break down below that 61.8, I'm going to switch to blue here. There we go. If you take that level, is you're mapping out this entire range, right, from 0 to 100, and you're breaking 61.8, a lot of them will just say there is a tendency for prices to continue to go on down and maybe retrace towards lows. Question mark. Okay. But you guys have seen me in some of my swing trade classes. We're going to hit fibs again real soon. But that's one of the big things, that is out there is the fibs, and we broke it. And by the way, I'm just going to do a quick zoom in on that fib right there. Where's that 61.8? Oh, it's a weekly chart. And look where we're at. It's actually anchored a little bit, but we're literally right at it. So sometimes when you break those, they are support before you break them. Case in point right there. We broke up and then we broke back down. Oop, couldn't hold right there. Will we struggle again? What I'm getting at, folks, is there could be also, if the markets will rotate into, August, September, October timeframe. I just want to put this on your radar. I know it's a few months in advance, and it's tricky to stay focused a few months in advance when there's so much going on the day to day. But if you do that, you can look and maybe say, if there's continued weakness in that dollar, well, what could that mean for specifically commodities that tend to react so sharply to a weakening dollar? And what I mean by that is you see a lot of strength in areas like gold and silver, for example. What have we been seeing with gold? We talked earlier about the markets after a strong upward move holding their gains. What do you think here? When you look at this, you step back and look at it, is it holding gains? We got to nod our head. It's holding gain. I mean, we can see it right there. Now, thus far, things can obviously change, but it's holding gains in an expectation that perhaps the gold futures might, or gold itself, may show strength going forward. One thing, I mean, this trend is, there's higher lows over here. There is, similar highs. It is kind of like a ascending triangle, if you will. I think I drew that okay. Yeah, that's pretty much diagonal that I was looking for. But that's an ascending triangle, and sometimes if they take out this range, I mean, well, the whole idea with an ascending triangle is oftentimes, what direction does it break as you approach the apex of that triangle? That's referred to as the apex, or where the two lines, okay, come together. I'm drawing in all caps. I might as well just finish. The apex of the triangle. I've also heard it referred to as the vertex, but I think it's officially the apex. They say in a triangle, prices should move one way or the other before you reach the end. Well, and what direction does it go? Well, one of the key things that traders will look for indications of that is, what is the direction of the trend here? What do you guys think when you're looking at this? Easiest way in the world, from left to right. Is the chart higher? It certainly is higher. The trend is up. The trend's up. And with that, we might break out higher. So let's dive in to maybe some of the stocks we could be looking at here. Just from the get-go, we still need to look at sectors, but we're kind of doing a little bit of a breakdown. This is kind of like a sector. Gold, it is within the material sector. I'm talking specifically about gold stocks. Now, the leader in gold stocks have been American Agnico Eagle Mines. We do have a paper trade on this that we put in that swing trade class that I put a link in for you earlier. So we've already got that one in place, but I just want to show you guys this because you can see it's an interesting little pattern. Now, as I stated this, as we look at these companies, it has been one of the leaders in the group. As I look through in the S&P 500 or other companies, it's really been strong. Of course, it depends on how you refer to as leader. There are some penny stocks over a short time frame that have a higher percentage, but are you weighing, the quality of a business too, the quality of the company, its longevity, its ability to create revenues consistently, etc. This guy really had a much bigger run than, let's just say, NEM. NEM, okay, did okay. Newmont. Notice Newmont's still over, we still just barely are holding at these highs back in 2024. And then you've got really one of the key underperformers, which was Barrick Mining, and that's still too. Oh, it's very similar to Newmont, hasn't broken out. Totally different from Agnico Eagle, where its prior highs. Let me draw a line right there. Did we take those highs out? Yeah. So, anyways, I've just broken it down a little bit. A lot of times we like to look at markets, and we use the dollar. There could be a rotation in the market too, but we use the dollar as a guide. If the dollar continues to get lower, remember it's below the 61.8. Gold sometimes in commodities will show additional strength when the dollar gets weaker, and we're kind of going into a flat channel here. I actually did get an alert this morning on this because I did put a trigger on this guy. I'll show you how I do it. It's really a cool feature. In fact, I'm going to do it again. This trend line, we broke above it, but we're back down below it again. Draw a trend line on the chart just by using a simple drawing tool, right? Many of you have done this. Click, click. Put it on those highs, cross the highs there. Closing prices is what I use. And then you just go down to create alert withdrawing. Trend line 1, perfect. And I'm just going to say crosses above that level. And I'm just going to say breaking or something like that, or trend line break. And then it will can text me or email me when that happens. It's very, very quick, about 3 to 5 seconds actually. Now you can set that up under setup, application settings, and then notifications to do that. Computer can also make a sound too. A lot of times we're not around the computer every minute of the day, and so it's helpful to have that text. But there you go. That's something that could be maybe it is influenced by the price of gold going higher. It has been previously. It's been one of the performers for sure, if gold does in fact break out. Now, silver, also a precious metal, could be influenced by the dollar breaking lower. And look at silver. You guys, that's kind of a flag pattern, isn't it? You see the flag? Now, some of the flags are 2 to 5 days on the pullback. That's about a 3-day pullback right here. Silver has been lagging gold. There's no doubt about it, but there might be some additional uses for silver, perhaps, more so than gold. Industrial uses, those are what a lot of individuals will say. And, maybe that could go. I was just going to throw out one stock over there that had a spike. Just as an example, here is AG, First Majestic Silver. You can see that it had, let's see, a 3-day, let's see, 3-day pullback. Yeah, right towards that prior high range, but really resting upon a that was kind of a bull flag pattern right there as well. All right. So a few things to look at there, but let's get looking and see what's moving in other sectors. This was unique because it was tied to the dollar. Perhaps we'll see some strength there, but this is what some traders could be looking at. So we wanted to review that. Let's do our markets at, oh, sorry, not that one. We're going to go right into our sector grid first. Following that top-down analysis approach, we looked at markets first. Now we're breaking it down into the second biggest category, sectors, seeing what has been moving out here. Now, technology has really been, as we said, it was the driver within the market itself. You can see the strength of the upside here. And we saw that this is really a key driver, and you'll notice it is similar. It's having such a weighted impact on the market. This is the SPX. So you've got all 11 sectors in here. Bottom right-hand corner, we've got the SPX itself. It looks a lot like Infotech. Everything else just about has been weighing down the SPX, but they have less of a weighting. It's weighted on market cap. So there you go. It's showing some strength. Now, communication services, this could be a fascinating area for us to look at. I mean, if you wanted to, because everybody's noticing too that this could be flagging a little bit. Let's maximize that sell so you can sort of see it. But look at this. I mean, as we look at the whole size of this move, it's a pretty strong move up. And we're just sort of flagging that. What on earth is in that's within the S&P 500? It's just a couple tabs away for us to pull up every single stock that's there. Okay, we'll cancel that. And we got to be in scan up top here. Stock Hacker, sub-tab Stock Hacker, scanning in S&P 500. Okay, those are where we need to be initially as we do this. Now, what I want to do is we're going to look now at intersect with, and we want to go in and just pull up what is in this industry specifically. There it is right there, communication services. Remember, we're pulling this up from the S&P 500, and here are your groups right there. Select all. What do we got? And what's really been leading the way? There it goes. It's going to populate. Perfect. Warner Brothers has been doing well. News Corp, Paramount, okay, there's A and B shares. You've got Interrepublic Group, Google or Alphabet right there, Match Group, as well as Omnicom. Okay, now a great way to pull these up on the chart, I'm going to drag this little line all the way over here, right next to our symbol. And I'm going to show you what that is. First of all, I customize. It's simply just send to #1 red, which is what I've got my charts linked to. So what I'm going to do now, I'm going to detach this. I could create a watch list too if I wanted to, but here it is detached. And this is going to be really cool because what we can do is just drag this guy all the way over here, Oh gosh, we can't really see what we're looking at. Uh, no, I got too much stuff in there. That's okay. Uh, to highlight the point nonetheless, let me show you. I'm going to go to the charts tab. I am going to go back into my charts here. This is how you can pull up and see what might be operating in that sector flag of communication services. Great data, right? Tapping into the data is something we can do so quickly on this platform. Okay, so I'm going to do this. This is the one. Let's pull it up and just see how this looks. We'll just pull this, we'll slide this guy right over here if it works for me. There we go. I'm just going to simply go through these. See, I did that. There's Warner Brothers. Oh, yeah, it was the strong one. Okay, News Corp. Yeah, a little bit of a strong upward move, but really kind of holding its price range, you guys. Good money flow as well, too. I want to get down here and maybe see some of the Googles, see what Google's doing. That one's a little bit down, but definitely showing some strength. If the sector itself has been holding gains and maybe showing the possibility of that trend continuing to the upside, well, it might be interesting for us to see what stocks are within that group. Look at Match Group over here. Match Group really jumping up, holding above this range, and now resting on prior highs. This could be an interesting area to look. Now, again, too, folks, we do have tons of earnings coming up, just so you know. And that can play a real factor, good and bad. You know, there could be risks associated with earnings. Always be mindful of that to if you're looking to trade or invest just ahead of that. Now, there is the Google right there. It's just breaking above those highs. And by the way, I wanted to highlight Google for sure, because look over here with me. That was a major level. Touch, gap. We broke through that one. And then what have we been doing since? That line came up a little bit higher over time, but there you go. Another high, kind of resonating with the historical resistance level. You know, it was there. It was showing there was resistance, but now if you get above it, could it then be support? Is what a lot of traders will look for. Could it be support now? Earnings could tell a lot, you know, about what might be going on or going forward with this group. All right. So hopefully you found that helpful. I just showed you a couple of different little cool tools to go through and look at this. That was that Omnicom. Oh, wait. Omnicom, yeah. Maybe forming a long-term bottom. There's a couple, I'm looking at a double. Okay, so a bottom. It's not really a double bottom until you start to break above the highs according to the pattern, but it could be forming a double bottom. So some awesome tools. Always want to highlight that because it's so easy to do, and yet it can be so helpful to tie in that data to what you're looking at on that chart. That chart right there. Right here. This communication service. We just looked at every one of those companies within that group very, very quickly. Now, as we look at this, there are some others in here too. Notice up top, we looked at materials in terms of gold. Well, it did break higher. It could be doing a little bit of a bull flag right here as well. Industrials with tariffs. You have to say that really industrials and technology are going to be some of the two strongest ones, right? A good quick look at a trade that we put in this class was the Caterpillar tariff type trade, and that has done really quite well, as you can see right there. It's been holding up. We still have 25 shares left in this trade. And yeah, it's been holding up fairly well, obviously, as you can see on the chart. That's our target for our long-term flag pattern. I've referenced this in my swing trade class as well, because I thought it was an interesting one to kind of keep eyes on too, as we go into that a little bit. All right. So we wanted to do this. I'm going to jump back to the sector before I dive into one additional sector. I wanted to go sort of big picture on the sectors. This is really, really helpful. We just looked at what had been moving a little bit. Come over here and look at this. So this is a 1 month change. I love to put some of the numbers behind it so we can kind of see this too. So, because then it kind of gives you the reference on the chart. Does it confirm with what we've just been looking at? How good are our eyes in picking up on some of this stuff? Well, we nailed it over the last month with information technology. We also pretty much nailed it there with industrials. Okay, but then after that, consumer discretionary and financials have been okay. You get down to the negatives down below, like real estate, healthcare, consumer staples. Okay. Before we're done with this, because we do like to break this down in pretty decent detail, I'm going to pull up the TTM squeeze. And this is a script I created in the ThinkScript class. And all it does is simply look at the number of bars that we've had, that we've been in a squeeze. You can see over here, real estate's been in a 17 bar squeeze. That's a very, very long squeeze. That's when the Bollinger Band goes below the Keltner channel. And it really represents sort of this time frame where volatility or price compression could be at extreme lows, because each of those are kind of measuring the range of stocks. But it's the Bollinger Band even going within the Keltner channel, a couple of different indications. But this is referred to as the TTM squeeze. It's an indicator in and of itself. But we're just looking at how long it's been in that range. 17 days. What's going on with real estate? It's tightening up. Why could this be of interest? Because sometimes when stocks or sectors go into a sideways range, and I'm going to show it to you right here what that looks like so you can see it. In fact, let's just do it right here. Let's do it on, I'm pretty sure this will work. I have not yet done this, but I believe that we're going to be okay adding this indicator in. So there's our real estate right down here. I'm going to maximize it. Do you guys see the extent of how long we've been sideways? It's showing extreme price compression. Now, traders, and many of you might fall right in line with this. When you get into a tight range and you get tighter and tighter, tighter, it's like, it's been referred to as a spring. You tighten the spring, it's going to shoot out. It's going to shoot. It's going to move. Prices could expand in range. Now, this was kind of an inverted head and shoulders pattern, and we never did break above the highs. You could also say it's a really, really extended, flag. That's the longest, shortest pole and longest flag, world record, right? I'm kidding, but no, it's just so long. But if we were to take out these highs, some traders might be interested because it's been such a tight range. Now, that's helping it's being confirmed for us by the TTM squeeze. So we're not just seeing it, but we're actually getting data to suggest that's true. I'm going to show you that data right here. If I click on this, we'll go to the TTM squeeze right there, just so you can see it. Just adding an indicator in here. I'm going to click on it. I'm going to scoot over here. And what you're going to want to do is just make sure that you take the histogram out. If you just want to see what this looks like, there you go. There's your 17 bars right there, everybody. I got the wrong drawing tool. There we go. Your 17 bars are right there. In fact, if I click on it, is our ThinkScript working? Spot on. 17 bars. Now, the key though is can it break higher? That's the interest. That's what's interesting here. Now, I did do a quick dive into this group, and I wanted to show you, just for the sake of time, we've only got really roughly 40 minutes for this class. But if you do look into this area, there could be something interesting there that some traders would pick up on. Let me show you. IRM. As I look at real estate, I want to highlight just a key point here, because we are looking at a REIT. And so with REITs, it's important. I just wanted to verbalize the disclosure here real quick, because we're dealing with real estate investment trusts. Now, risks of REITs are similar to those associated with direct ownership of real estate, such as changes in real estate values and property taxes, interest rates, cash flow of underlying real estate assets, supply and demand, and management skill and credit worthiness. Now, investing in REITs may pose additional risks, such as real estate industry risk, interest rate risk, risk related to the uncertainty of and compliance with certain tax regime rules and liquidity risks. I appreciate your patience, folks, as I read that, because there are different risks with REITs. They're real estate, right? And they do, oftentimes, many of them will pay dividends, and sometimes those dividends can be higher. This is a group within the REITs that could be of interest to some traders, because it falls into an area of data centers. So these guys so this is not just like creating like housing complexes. They build data centers. And a lot of times there's evidently more demand for data centers, specifically with AI. And look what you're getting over here. This is kind of a stronger move to the upside, and we're still just kind of holding that range. Gravitating around a big number. That's the big old century mark right there. That's right. That's 100. And sometimes prices can get above that. It could be positive. That's a big question mark. We don't know for sure, but that is one. In fact, you just go up top and click on Analyze, scoot on down here, and it says, okay, help unlock the value of intelligence from their assets is something you wouldn't normally think about with a real estate asset, right? Normally. Their assets through services that transcend the physical and digital worlds. So information management, data center, asset life, information security, they're really kind of in that area. We've been getting a little bit of a lift with all this investment into AI. Here is the last one. I think these guys are even more. Digital Realty. You can see it, there's the move up here, holding its gains. And let's look over here just to confirm. Yeah, so this one acquires, develops, and operates data centers. So think about processing of data, AI, the demand, the investments that have been made in there. Some of these could be a little bit, they could be, traders could be looking at them, investors could as well. We picked it up by using the TTM squeeze in sector analysis. It's been there for 17 days. Could be ready to move. We don't know. Maybe it won't. But, and it might go to up, it could go down, but a lot of times they do go with the underlying trend. Now, what are the dividends showing over here? It's about 2.82%. The other one, IRM, Iron Mountain, like I said, these pay dividends like 3.2. Remember, dividends are at the risk of being cut at any time. I wanted to also note that as well. That is a possibility, right? Just as we talk about dividends. But that's cool. So we broke down kind of sectors there as well, and maybe tried to find some of the hotter areas within the sectors. So not maybe some strength within sectors, but then also breaking it down into more granular sort of detail. Now let's go over here and just take a quick peek at our markets and sectors review. Still, we saw some good strength with the advanced decline line right over here. If in fact we do dip lower below minus 100, which is where we're almost at, we came close to it, and then break up above on our McClellan oscillator. So going below 100 and then breaking back up above minus 70. McClellan himself, Tom McClellan, and his indicator says 2 to 3 weeks of a bullish move to the upside. So we'll see. We've got about 2 weeks left. We came very, did we hit that? I don't even know if we did. We got dang close. Doesn't look like we quite crossed there, but we got very, very close to that level. Okay, I guess a minus 81.5 or so. Okay, but that's interesting as well. All right, SPXEW, equal weighted on the SPX, thinking of breadth in the market, touching off of prior highs. We have down here no indications this week, so we like to go through it, of the Hindenburg omen, the fracturing of the market, perhaps with a 52-week new low and high range of a number of different stocks out there. We didn't get that, and all else equal, that's a positive, because sometimes that can result in weakness when you do get those spikes. In fact, that's what traders will look for specifically. All right. Not too much growth, not too much ground being made on new highs in the market. Although, so I think it's kind of, there are going to be certain areas that are still showing strength, but the tariff pullback, companies have not yet responded to new highs like the market has. And you have to say, within this this is a NYSE read, right? The NYSE, but a lot of, even though the NYSE is going higher, you still have a lot of tech within the NYSE itself pushing it higher. The other companies, not nearly as high within that group. We looked at seasonality already, and there you go. Folks, if you found value out of this presentation, if it does give you some help, some ideas within your own investing, just do me a favor, reach out, smash that like button. It lets me know that you found this informative and useful for you. Also, be sure to subscribe, just bottom right-hand corner of the screen as you do that as well. Didn't see any surveys out there. I do appreciate Cam helping out in the chat as always. Thank you all very much for that. And great to have the conversation going back and forth. Everybody, we'll have a fantastic rest of the day. We'll look forward to future discussions with you. Keep an eye on those markets. See you next time.